What is going on, my YouTube family? We're finally here, and this is the third episode of my How to Day Trade series. And we're gonna be talking about all of my setups, A+ setups, A- setups, what they are, how to trade them, how to get into them, and all of the above. Now, if you have not checked out my other two videos on market theory and technical analysis, please do so after this video so you can be all caught up. But without further ado, let's get straight into the lesson. Now, we must have a couple of things before we are actually going to consider a setup, right? So my must-haves will be market structure, volume by price analysis, risk to reward parameters, obviously, right? Entry triggers and key price levels. Let me just break those down a little bit more for you, right? So market structure, basically, I want to know if the market is bullish, bearish, or balanced. That's it. Very, very simple. Just because your trend is the friend. I always try and go with the trend for higher probability setups. Now, volume by price analysis is super simple as well, guys. All I'm doing is looking if volume is increasing, right? I'm playing a breakout, right? People are transacting at higher and lower price points. Usually means price is going to continue to go in that direction, right? On the contrary, right, if volume is decreasing, I'm looking for a reversal in the market. Now, for me to actually take any trade, I actually need entry triggers. These are a couple of examples, right? Absorption, liquidity sweeps, false range breakouts, trap participants, aggressive follow through, imbalances, whatever. And we talked about these in the last video where we talked about technical analysis, right? But coming into this, we'll talk about a lot more entry triggers as well, because it's a super important part. And this is actually where most people get confused. Now, risk parameters for me just involve my win ratio, risk to reward, and position size. Let me explain this in a little bit more depth here, guys, right? So your win rate is exactly how accurate you are. So if you know if you're 40% accurate, this is by setup, by the way, right? If you know you're 40% accurate, if you know you're 30% accurate, whatever it is, right? If you're 30% accurate with the setup, right, you have to have a 1-to-3 risk reward ratio every single time or you won't be profitable, right? What that means is if you're risking $100, you must be aiming to make $300 every single trade if your win rate is 30%, right? Makes sense. Now, this is how you can actually get your win rate, right? You can either back test or use live data. I recommend you back test so you save yourself a lot of time and trouble, right? Make sure you back test every market condition, balance, bullish, bearish, whatever it is, and over 100 trades. In reality, like over 1,000 trades, man. You need a lot of data. A lot of you guys have win rates over the span of months, and you think, oh, I'm 90% accurate. With, a win rate over the couple months does not matter. You need a lot of data, so back test like crazy. Now, your risk to reward is just where your stop loss is and where your take profit has to be according to your win rate, right? Remember this table right here? This is what you need to be able to manage your risk properly. For most of my setups, I only need a 1-to-1, right? Because my win rate is pretty high. Now, feel free to screenshot this if you guys want to. It's just a general rule of thumb of how you should risk a personal account. And this is a general rule of thumb of how you should risk your prop from account. So pause, screenshot, whatever it is if you guys want to. Now, when I'm placing trades, my stop loss is actually going to be based on invalidation. Either it's a new high or a new low, or if I'm trailing it out, a new structure. The market does not care, I say this all the time, about how much money you want to lose. Only cares about price. So if your stop loss or invalidation level is not where the market tells you it should be, you're incorrectly trading. Let's go through some quick practice to show you what I mean, right? If I got in long at 5572, which would be right around over here, where would my invalidation level be, right? My invalidation level, this is my entry, invalidation level would be at this last low. Why is at this last low, right? Because I got in long right here. I think the market is gonna go up and test these highs, right? If I'm wrong, I don't want to lose that much money. So where will the chart tell me or a price tell me that I'm wrong? If I'm in long right here and we make a new low, my thesis is invalid. My thesis of price going up into these highs is invalid. So that's where my stop loss will be. I want to get my entry as close to the invalidation level as possible so my risk is very, very mitigated. Another example, right? I got short at 5580, right? Where is the invalidation level at 5580? Let me move myself here, right? Entry, right here. Where's my invalidation level, right? Right at the high. Super, super simple. Now, sometimes I'll actually put my stop, 0.25 or a point or a tick or a point off of the actual invalidation level to give myself a little bit of room, right? So it depends as well. So let's say we have big limit orders sitting in the market or big imbalances sitting in the market, right? So if my entry right here was at around 4282, which is up here, and a better invalidation level is right above these huge orders that you can't see, right? So if I got in short right here, right, I want to put my stop right above these orders because that's a better invalidation level. Meaning if I can get my entry close enough to put my stop loss above these invalidation levels, it'll be much better than just putting it right above the wick. Now, my take profit level will be the next coming level of any support and resistance, upcoming supplier demand, VWAP, previous high or low, EMA level, big limit offers, whatever it is, I want to make sure I get out at the first slightest bit of resistance. For example, right, my entry, where are my two potential take profit levels, right? Number one, VWAP. There's my stop loss. VWAP is my first take profit level. Where's the next one? At this low. Easy. Where are my two TP levels, right? Entry was right there. First TP is at this high. Where's my next TP? At the next high. Super, super simple. Now, risk is trump. Risk trumps everything, right? No matter how good the setup looks, if your stop loss and your take profit does not align with your risk to reward ratio, you cannot take the trade. It's that simple. Your entries are key. Again, we cannot control risk. We can't control risk. What can we do? Right? We can only control our position size and our entry. That's it, right? Invalidation level won't change. Take profit level won't change. Risk reward ratio won't change. Position size, entry. That's it. So this is how I manage my position size, right? For setups over a 60% win rate, I'll actually risk more than setups with a 50% win rate. And that's because with 60%, I only need a 1-to-1 to be profitable. With 50%, I need at least a 2-to-1. Now let's go ahead and go over the setups, baby, right? So everything will be constant, right? Key level, entry trigger, volume by price analysis, all this is gonna be constant. I need all of these, right? An A+ setup will be with the 4-hour trend, and the 5-minute structure will be on our side as well, right? A- setups will be against the 4-hour trend or pre-market, against 5-minute structure, news, no news Fridays or Mondays. Any of these, one thing come into play during the day or during a trade, it will actually switch the setup to A- for me, which means A- doesn't mean it's a bad setup I shouldn't take. That's just how I label them versus 50 and 60%. Let's go over these setups, right? What we're all here for. So the first one we're gonna talk about is going to be a supply bounce, right? This one has been really, really successful recently. So has to be in a zone, supply, right? Volume has to die off as it approaches the zone, right? We're gonna see less interest as we make those higher prices. We need to see an entry trigger. We need to see it be with the 4-hour trend. I need a 5-minute structure shift. And it also has, if it is a VPOC in the level, which is something we talked about during our previous video. So watch the technical analysis video, it's clutch. If the VPOC in the level actually increases its win rate by over almost 5%, which is pretty crazy. Now, every single day on my Discord for completely free, guys, I go ahead and post my pre-market plan, which is basically the setups I'm looking for every single day, and with my levels, also do videos and kind of draw out what I'm looking for every day. And this is free, just so you guys can kind of, see me do it in real time. And that's just how people learn. For me, I'm more of a hands-on learner, so seeing someone else do it in real time is huge. If you want to join the free Discord, I'll put a link down below in the description. Now, let's continue on this supply bounce, right? So again, this is a quick example, right? It has to be in a zone. So what do I mean by that? Price in a 30-minute supply. Easy money, right? Next. What is volume doing as we approach supply, right? Look at the volume down here. It's dying out. Perfect. Next. What is the market structure? Let's talk about the market structure here really quickly. So the 30-minute right now is currently bullish, which is right here. The 4-hour is bearish, which is right down here. And the 5-minute shift for both of the entries. So as you can currently see here, we're uptrending. Whenever we make that new low, structure has shifted. Uptrending, whenever we make that new low, structure has shifted in the 5-minute chart, making it an A+ setup potentially, right? If we get in after the structure shift. Now for this example, the entry trigger was actually absorption. So right here we have an absorption, and we talked about this in the previous video, right? Absorption, right? And here's aggressive follow through, meaning that we had an aggressive move down into the imbalance for a sell-off. Now we'll talk about entry triggers here in a second. Let's keep going over the setups, right? The next one is called a demand bounce. So it's just basically flipping the supply bounce, right? Same thing here, just flipped in demand. Volume dies off as it approaches the zone. Entry trigger with 4-hour trend, 5-minute structure shift, VPOC adds percentages, blah, blah, blah. This is actually pretty high this year because of a bull market we've been having for a while. Quick example, right? Right here, we're in demand, right? Volume by price. Volume is dying out. Y'all can't see it. Volume is dying out as we're in demand. Pretty simple. What is the structure, right? The 4-hour into an uptrend, 30-minute into a downtrend, 5-minute structure shift right here, right? Made those new highs. Now, right here, so the entry trigger for this play would have been a liquidity sweep, but because that entry was before the 5-minute structure shift, it would have been A-. It's that simple, guys. It's that simple. There's a sweep of liquidity. Bam, there's the entry. Now let's talk about the breakouts. Breakouts are one of my favorite ones to play as well, especially in a trending market, guys. So this has to be a zone break with momentum. We need to see aggressive buyers present on the break. This is what I'm looking for in the Delta, guys, on the break on the open of New York, right? Big momentum candles that close above the zone on the 5-minute chart. This is a supply break or as a long play. Increasing volume on break with the 4-hour trend, with the 5-minute structure, obviously. And the retest of the zone after the break will be our entry. I'm never trying to catch breaks of levels or breaks of zones. I'm always looking for the retest for confirmation. Now, let's go over an example, right? Key level right there, supply, and we just broke supply aggressively. What is volume doing on the break? Picking up like crazy, right? What is it doing on the tape? We get a 1,000 positive delta on the break and a crazy increase in volume. What is the market structure, right? 4-hour chart is bullish. 5-minute chart is bullish. 30-minute chart is bullish. All bullish, the trend is your friend, right? Let's talk about the retest. What happened during the retest? Volume died off, right? Dead volume on the retest, back into supply. The entry trigger here was a false range breakout. We'll have a bunch of triggers that we'll talk about here soon. Now, demand breakout, same shit, just flipped, guys. Screenshot this, read this, memorize it, pause it, whatever it is. Let's go over an example, right? Broken demand. There's a demand that got broke, right? Volume with price. What is volume doing on the break? Increasing, guys. Super, super simple stuff here. Was it an aggressive break, right? So we had an increase in volume on the first break, but candle was not right? The candle size was a medium candle size, the body was small, the wick was big. Now we come back and break this level again with a huge body candle with nice volume and nice negative delta. That's the break I would have considered, right? This one would have still worked on the retest. It would have worked, right? But this one, as you can see, was much better. Let's talk about the structure here, right? 30-minute is finally shifting to bearish. The 4-hour is bullish. Since the 4-hour is bullish, this is an A- setup, and the 5-minute is also bearish, as you can tell by looking at these pictures right here. The retest, right? What happened? The volume died off on the retest. Super, super simple. And the entry trigger was the absorption right here that we can tell through the previous video. Now, for an A- supply bounce, let's go over what we talked about, right? Against the 4-hour trend, against the 5-minute structure, news, pre-market. That will make it A-. Same shit with the breaks, right? Against 4-hour trend, news, pre-market, no news, Monday or Fridays. Those are things that kind of make my setups A- because I have all the data to back it up. And look how lower the win rate is, right? We need a 2-to-1 for these setups. And for the bounces on demand, same thing, right? Bounces on the breaks, same thing. This will all make it A-, but these are the win rates just so y'all can kind of see and compare. Now, what is next, right? We know how to find key levels. We know how to find market structure. We know how to do volume by price analysis. We know the invalidation levels. We know the take profit levels. So all that is left is the entry triggers, right? This is some quick examples and with win rates of some entry triggers I have. Now, these are all about absorption, liquidity sweeps, trap players, aggressive continuation, demand bounce. This is a dead volume wick, my bad. Breakout or false range breakout, so just a fake out of the balanced range. These are some of my entry triggers. Now I do have, pretty much in depth what these entry triggers are, how to find them, how to use them, and how to actually properly play them. Now, if you want me to make a video on these entry triggers, comment down below and I'll go ahead and make a free video on YouTube about all these triggers. But I hope you all understood the setups. Super, super simple. You combine these with some killer entry triggers, you have yourself a very, very good play and a very, very decent strategy to actually make some money in the stock market. Now, I actually have this slide you can download as well as like a kind of more in-depth free course. I'll link it down below in the description. Without further ado, guys, I'll see y'all later.